Hey, everybody, welcome back to the Investor Fuel Show. Really excited to have my friend and actually business partner, Shawn Winslow, on with us here. He is in our Cashflow group. It's our multifamily group inside of Investor Fuel, which some of you didn't even know we had a multifamily group, but we do. And today we're going to be talking about how to find large multifamily deals. Professional real estate investors know that it's not really about the real estate. In fact, real estate is just a vehicle to freedom. A group of over 100 of the nation's leading real estate investors from across the country meet several times a year at the Investor Fuel Real Estate Mastermind to share ideas on how to strengthen each other's businesses, but also to come together as friends and build more fulfilling lives for all of those around us. On today's show, we're going to continue our conversation of fueling our businesses and fueling our lives. I'm glad you're here. Hey, Shawn, welcome to the show.
Hey, Mike. So excited to be here. Thank you for having me.
Yeah, glad to have you here, buddy. I was just telling you, a lot of folks inside of Investor Fuel has been going on for a little over 4 years now. And we just added the Cashflow group, which is really kind of multifamily investors, as you know, maybe 3 meetings ago, I guess. And so it's a smaller group, growing, a lot of great people, a lot of great things happening in there, and excited to talk about multifamily today, which is primarily what I invest in these days. So glad to have you here.
Hey, I'm excited. And I always love talking multifamily.
Yeah. So tell us a little bit about your background. There's some folks that are in our group that were single family folks and they're transitioning. That's not your background. You have a little bit different background. Tell us about it.
Yeah, I went straight into multifamily. So I'll take it way back since, if anyone who's watching, you probably can tell I'm a little on the younger side. So in order to have a good story, I got to kind of take it all the way back.
So way back might not be that far back.
Yeah, exactly. So growing up, I grew up in a small town in Vermont, and my family were a bunch of entrepreneurs. My dad, my uncles, my grandfather. And so I was kind of conditioned in that mindset, had my own, lawn care business where I was mowing my family's and neighbors' lawns, got some friends together to get more property lawns mowed. And we do snow removal because I'm from the Northeast. So yes, we get that cold thing called snow. And then slowly as I got older, it's funny how things happen. It seems like a lot of people, you get conditioned where you do well in high school so you can go to a good college and then do well there to get a good, quote unquote, good paying job.
Right.
So I kind of lost track of that entrepreneur spirit for a while because originally that's what I wanted to do. But instead went to school, got a degree in finance in Boston, and then started a finance career there. So I worked for one of the top 10 largest investment firms in the world for about 7 years. We had mutual funds, ETFs, smart beta product. And so I did that for a while. And it's funny because after a while, you think you're going the right direction, right? You think you're there to help the investor. But after a while, you realize this isn't the best method of investment for people.
Right.
One, it's not cost effective. There's no tax advantages. The one who's getting wealthy is the people in my position, the portfolio managers, that side of the table, not the investor like it should be. So
charging fees whether they lose money or make money, right?
Exactly. So I just got a moral dilemma. I didn't want to work for a firm that was selling something that I wasn't personally using. It felt weird. So I wanted to make a change, and I kind of just like stepped back and decided, okay, well, if I want to make a change, it should be a lifestyle change too. Like, what type of life do I want to have? And I looked at some of my friends that had like what I considered the type of life I wanted. I looked at successful people that I ran into throughout my life. And there was a group of people that had money and a flexible schedule. And the funny thing is they all had the same thing in common, and that was real estate. So I was like, this real estate thing. And then I remember a conversation I had with my grandfather who loved investing in stocks. And that's kind of what led me down to the finance road. But one time he told me that his retirement would be all the real estate he owned because, it would pay him a monthly income.
Right.
So then that really got the gears turning. I ended up taking a real estate finance class at a university in Boston. And then I went down the road, and I thought I was going to work for like a big private equity firm. And then I kind of had to step back. I was like, wait, no, I'm trying to get out of corporate America. Let's do something on my own. And that's when syndication fell into my lap. And because I was licensed to sell securities, I had to make a decision because I couldn't raise money for, my job and for a private placement real estate investment. So I ended up making the change into real estate.
Awesome. That's cool. Yeah, I think it's common, especially if you came from an entrepreneurial background. You know, without telling my whole story, a lot of folks that listen to my podcast have heard my story before, but I worked for a large bank and, wore a suit to work and everything, and
Yep.
thought that made me important. And then you kind of realize like, this isn't really that sexy of a job. And some of that stuff wears off. And eventually as you start to grow in it, you're like kind of thinking surely there's more to working than this, right?
Yeah. It's true. And like, yeah, I'd wear the tie and the suit every day, and there's more to it than just that. And like, you've got those golden handcuffs on, right? You're probably making a decent job, but is it fulfilling? And for me, it just was not fulfilling. And I knew I needed to make a change. And luckily I found real estate at the right time.
Yeah. Awesome. So we're going to talk today about finding deals. And, we've obviously talked a lot about that on my show with, on the single family side. And I don't know that we talked about it before on this show, Investor Fuel, for the multifamily side. And I should clarify with folks that are listening here, when we say multifamily, what we really focus on is kind of 100+ doors, something you can have professionally on-site managed, not like, 4 doors or 8 doors or something like that. Nothing wrong with any of those things, but when we say it, we're talking about kind of large commercial properties with 100+ doors. So what are some of the ways that, typical investors find? Let's kind of start off with what most people do and then kind of hone in on what you kind of specialize in. So what are some of the more common ways to find multifamily deals?
Yeah. So when I started off, I actually started off on the small multis, right? So I had to build some passive income before I could take that leap and leave my job. So the way I was finding those deals, which traditionally most people do, is, MLS, making a friend, finding with an agent, or going to, RIAs, meetup groups where, you're getting to know people that also invest. And that's how the smaller ones are done, right? That's how you find a lot of those. But when it comes to the bigger ones, primarily that is through, commercial brokers. Yes, there are off-market instances where you can find deals, but that's getting more and more rare just because of how hot the market is. We ran a list of our target markets, just like, online, you can just run a list of, properties owned, break it from like 100 doors to whatever. And we did that, and we got a bunch of properties, and it usually gives you the LLC. Then you look up the LLC and find who owns it. And so that's what we did. And we reached out to a bunch of them because we just wanted to change it up. But the ones that actually replied to us, and this was in the past couple of weeks, so this is pretty on point, on topic stuff today. And majority of them, if not all of them, said that, they appreciated us reaching out, and some of them were interested in selling within the next 6 to 8 months, but they all said they were going to be taking them to market just because it's so hot.
Right.
So the off market's very hard right now. Can you find it? Of course, but it's pretty tough. So the way you're finding these big, large apartment complexes is going through commercial real estate brokers.
Yep. Yeah. And unlike single family deals, like the value is fixed at like the retail kind of appraisal rate. Like what is for the most part, the MLS say
Right.
the value is, right? With commercial, the cool thing is you have lots of opportunities to add value. And because you're buying it as a percentage of NOI, you're not a multiple of NOI. There's no comp next door that dictates what the value is, because your situation can be very different from, what you charge in rents, a lot of other efficiencies you might have, and all those things, right? So that's one of the best parts about multifamily is there's effectively unlimited upside based on what you plan to do with the property.
Yeah, exactly. And the way I look at it is each large complex, each multifamily property, and like Mike said, when I'm saying that, I mean usually 100+, 75+ units. The way I look at it is like they're their own little businesses. So Mike owns several businesses, and if I wanted to buy one of Mike's businesses, I wouldn't look at comps. I would look at what is his bottom line. That's what I'm buying.
Yep.
And that's the same thing with these apartment complexes. You're buying that bottom line.
Yep. Yep. That's awesome. So the good thing about that is you can buy them off of the market that are kind of listed or active and still find deals. They don't have to be these deep off market discounts that nobody knows about, right?
Correct. Yeah.
Yeah.
You know, obviously that's like nirvana right there, finding that. But like I said, that's getting harder and harder.
Yeah. Yeah. So talk a little about, because you guys primarily focus on working with brokers and building relationships with commercial brokers, right?
Yeah.
So where do you
Yes.
start? I mean, are you willing to go anywhere in the country to find deals, or do you focus on specific markets? I guess the first thing is you're building relationships with brokers. They're usually geographically, I mean, they're localized to specific markets typically. So talk about like how to even know where to look kind of geographically.
Yeah. So there's a couple different factors. Obviously, you know, if you're in a hot market that's in your backyard, that's ideal because you have boots on the ground knowledge. But that's not the case for everyone. Especially for me, I'm in the Northeast. You know, we're buying for cash flow, and that's very hard to buy in the Northeast, especially in the major markets like a Boston or New York. That's really hard. So I had to find, you know, different target markets. And so what we look for, one, I wanted ease of travel. So I didn't want the flight to be really more than, you know, 2 to 3 hours. And so that can get me to a lot of places though. Get me down, you know, to Georgia, can get me over to, you know, Indiana, and so forth. And so what we look for within the market, we look at the demographics. So obviously you want to see, we usually look over, you know, a 20-year span because we want to see that it's trending in the direction that we want. So for instance, population growth, you want to see that trending up. You know, we look for at least, you know, a 20% growth over the last 20 years. Then we look for income growth. We look for, you know, home value growth, and we look for at job growth. And then also we look at crime. There's a crime number you can find, and this is all on a website called city-data.com. And you don't want a crime number above 500. So you want it below 500, and you want it over the last 10 years or so to be trending in a downward trajectory. So we'll look at all these, and then you also want to make sure, you know, you can buy below replacement costs. Obviously, that's huge. You want it to be, you know, your demand to be stronger than your supply, obviously. So we look at all those factors, and fortunately, there's a lot of markets that do fit that. So then we had to kind of, you know, decide which ones do we want to focus on, because I don't think it's great to focus on, you know, 5, 10 markets. You really want to focus in on 2 to 3. Right. So we're primarily focused on Georgia, South Carolina, and North Carolina, that kind of southeast right there.
Yep.
But we will look into other places like we do, like Indiana. So we have started looking at as well. And so that's kind of how we pinpoint the markets.
Yep. And everybody has different criteria, but you know, for the most part, there are people that buy specifically for appreciation, like they are less worried about cash flow. Those are probably more institutional players that have, you know, deeper pockets to weather the storm if it doesn't cash flow, I guess, right? But for the most part, you're focused on cash flowing properties that are in markets, kind of B-class properties, right? Stuff that's like not brand new, still in good shape, operated fairly well, but can be improved for the most part, right?
Correct. Yeah, that's where we find the most meat on the bone, where you can actually, you know, create some value for some appreciation, unlike a new building where, you know, everything's already been done, right? Because it's just built. So you're pretty much there just for, like you said, an appreciation and, you know, a little better downside risk.
Yep. So how do you find the right, so once you found a market, then I guess you start to look up who are the brokers or agents that we should work with in this area. Talk about that a little bit.
Yeah. So the kind of the easiest way, traditional way most people do is go on like the LoopNets, the Crexies of the world. They're online websites that, you know, host deals. You know, it's like a Zillow, but for commercial. But the thing about them is those are usually the not so good deals, right? The deals that have been like, you know, you say Zillow and it's been on there for like 200 days. Well, that's not good. Those are kind of the deals that fall to the Crexies and the LoopNets. But a good thing about that is you can see what brokers are actually selling. So you can go on and get their information and reach out to them. Then there's like you could just go to the major brokerage firms. So you got like the Marcus and Millichap, the CBRE, the Cushman and Wakefields, the JLL, the Colliers, and so on and so forth. And you could just, pull the team, the multifamily teams or whatever commercial asset class you're going after and reach out to them that way. But what I call the ninja way and the best way to do it is what I did is I grew a relationship between my lender, and he works for a national lender, and they also have a brokerage arm. And so they have a lot of data when it comes to, sales. So I told them, these are my 3 markets. Could you please run a list of brokers that have transacted in the last 12 months? And so it spits off a list, has the brokerage firm, the broker's name, the amount of assets they sold from a dollar perspective and from a unit count. And what's great about that is you can kind of figure out what the average price per door is, just obviously simply by taking the dollar amount and divide the units by it. So then you know what they're focusing on. If it's a high number, then they're clearly class A. And if that's not what you're going after, then you probably shouldn't focus on him or her.
Right.
And as you start to go down and see the lower price per door, then you get to the B and C class that you may be focusing on. And those are the ones you want to reach out to, because we know we're all busy. At the end of the day, we don't want to waste anyone's time. We want to be reaching out to the right person, people that are actually doing business. And so that's how we've done it and how we continue to do it we've had great success with it.
Yep. And talk a little bit about because that relationship is key. Like you're trying to form relationships with people that'll bring you deals maybe before they take them to somebody else, right? Or maybe even before they're technically on the market, but they know it's coming to market, maybe like kind of like a pocket listing type scenario. So talk a little bit about how some things that maybe you do to build relationships with people, like upfront, because they probably get calls like that all the time. Like, hey, let me know when you have a good deal. Like they hear that all the time. They're like, okay, well, what can you do to stand out? And then what do you do to kind of nurture those relationships over time? Because probably a pretty common scenario is they don't have anything right now or anything that you're interested in, but maybe they will down the line. And so talk about kind of what you do to build the relationship and then what you do to maintain it.
Yeah. So you're 100% correct. They're getting those calls and emails every day.
Right.
Twice a day, 5 times a day. Hey, show me your best deal. Like, why would they do that? Just because Joe Schmo, you called them up? No. So yeah, you need to stand out. And what's worked for me is I usually have kind of a 3-prong approach. I'll send an introductory email that states like, hey, I invest in this market. This is what my team and I are looking for. I attach my credibility kit, which is simply an overview of what we've done, what we're looking for, just so there's some credibility that we're actually legitimate.
Yep.
And then I'll pick up the phone and call them too. And what I want to do with that is obviously introduce myself, tell them what we're looking for again, but then have them talk, because people love to talk about themselves, ask about their personal life. Then you're really here just trying to find a personal connection. So, do they like to golf? Maybe you like to golf. Are they a skier? Do you like to ski?
Yep.
So on and so forth. Because you just want to build that personal connection. And I try to spend most of my conversation with these guys and gals just talking about personal stuff, not even business. Obviously, you get to that business point because that's what you're all there for, but it's just a way to build that personal relationship. And then what I do, since I don't live in the market, is I say, hey, I'm flying down on this date. Can we grab a coffee? And then assuming they say yes, get on that plane and you get down there, and they're generally very impressed if that's the reason you're there. Right. I had one guy ask me, he's like, so why are you in town? You got you going out this weekend here? You visiting? I'm like, no, I'm here to see you. I'm getting on a plane later tonight to go back home. And it means a lot to them because, like you said, Mike, they're getting emails and calls all day long, but you actually showed up. And what I'll also do sometimes, if I don't get that type of conversation right out of the gate, and maybe I haven't been able to ask to get coffee, I'll send them a Starbucks gift card saying, hey, coffee's on me this time and next time when we meet in person. And then that seems to work too, because that gets their attention.
Yeah. It's rare. I mean, this world of like social media, and we're all connected, that nobody has real connections. They're just like those relationships are way more shallow, right? People say things, but they're kind of shallow behind those words. So it helps you stand out.
Yeah, it's really cool. And so, like, for instance, the deal that Mike and I are business partners on, I I just played golf with that broker.
Hmm.
Was beginning of December, and he just had a kid. So, and he's a big Braves fan. So I sent him, a Braves onesie, and we were on the course just having a great time. And that's what it's about. I
Yeah.
want to do business with people I like, and I know he wants to do business with people he likes, and because of all that, once you actually perform and close on a deal, they know you're legit. You got them paid because a broker,
Right.
eats what they kill. Now he's sending me stuff like you mentioned, like a pocket listing before it
Yeah.
goes to market. So I get first look. I know there's a bunch of other people looking too, but it's still better than before it hits market.
Yeah. Yeah. Talk about what do you do to nurture those relationships? Maybe even talk about some systems you might use. We use a lot of different CRMs and things like that to track, but as you're building relationships, a lot of those things are invaluable to remember, some of the key finer details that you might be maybe forgot, or like certainly a birthday, or they like the Braves or whatever it might be. Like, what is there a system that you use, and kind of what's a systematic approach to making sure that, because a lot of people I found they'll go do some activity like one time, and then they just kind of, it gets hard. It's easy to not nurture a relationship if you're not getting anything out of it. But that if you do that right, that you'll obviously stand out. But maybe talk a little about how you kind of nurture those over time and how you track it.
Yeah, yeah. So yeah, it's not who you know, it's who knows you. And for people
Right.
to know you, you need to stay top of mind. So you're 100% correct on this. And what we do is there's a couple things. So we use Active Campaign and Podio as our two, like, CRM and email campaign software.
Yeah.
And so we track birthdays for the brokers. Obviously, if they're like a sports fan, what team they like, or if they like golf, and we'll always kind of curate our, how we reach out around that. So for instance, the broker, just had a kid, so I sent him that Braves onesie. Golf, you send them, some Pro V1s, and also, um, we. So I sent, what I usually do is my hometown. I even sent this to Mike. In my hometown, there's this handmade glass company, so they blow glass, make drinkware, and I like to personally brand it with their stuff and send it to them. So for like Mike, I sent him old fashioned highball glass with the Investor Fuel logo on it. So for a broker, they usually don't have their own logo, so I'll either do their name, their initials, or something that's meaningful to them, and
Yeah.
send it to them, just thanking them for all that they do. And that type of stuff what I've seen goes a really long way. Obviously, it feels good to do, but
Yeah. Yeah.
it just keeps building that relationship. And the key is just to stay top of mind. And then, like I said, the whole Starbucks card, like, I'll even send that still, even if we've done deals before, I'll just randomly send it, like, hey, I appreciate what you do, like, coffee on me, just so you're staying top of mind.
Yeah. No, that's cool. That glass was a great gift. Thank you. I'm at the office now. I wish I would have brought it in. I took it home.
No, you're good.
I drink my alcohol at home, not at the office. What I'm trying to say here. But no, that was a really cool gift, and it was thoughtful too, right? I mean, I think we do a lot of that stuff with Investor Fuel. We try to do thoughtful gifts and things like that because it's just people remember that, right? And we try to just do cool things that's just kind of untypical. So thank you for that.
Yeah, yeah.
And I do want to do more deals with you, my friend, by the way. So
Oh, we will. There's no
yeah.
question about
Yeah.
that.
So maybe in the vein of, and we just talked about Investor Fuel here. So you've been a member of our Cashflow group, which is our multifamily investment group. We have a meeting coming up here in just a couple of weeks, which excited about. And Corey Peterson's, I'm a business partner with him on a bunch of deals, and he's actually a partner with me in Investor Fuel, and kind of leads this group that you're a part of. So would you mind just sharing your thoughts, giving a little testimonial maybe for your experience for the Investor Fuel Cashflow group?
Yeah. So Investor Fuel has been a game changer for me and my business, for sure. So Corey Peterson, very good friend of both of ours, mentored me on the multifamily apartment side. And Corey originally had his own, like, Kahuna boardroom mastermind, and then he transferred over to Investor Fuel. And yeah, it's just been amazing. What Corey started has just grown. Like Mike's structure, the infrastructure of Investor Fuel has just allowed our group to just, like, flourish. And I'm really happy for the move. And like I was telling Mike before we got on here, is I just love the people that are in this group, the personalities, the atmosphere. It's everyone comes from a place of, giving and wanting to add value. There's no one up on stage like pumping their chest saying, look what I've done, look how great I am. That's the furthest thing from what Investor Fuel is. And that's what gets me excited to come every time. And then once we're there, it literally, people want to see you exceed. They're there to help you with any problem you may have in your business. If they have an answer, they're going to give it to you. And then also the fact that we were talking about this too, the cool thing about the Cashflow group and the multifamily side, everything's so much bigger that you can partner with people because there's more to go around. So that's what makes it really cool. Everyone in that room could potentially be your partner on the next deal. It's really cool.
Yeah, that's awesome. Thanks for sharing that. Yeah, I think it's cool because there are people in there that have partnered on a bunch of stuff. They either help each other raise money, helping each other, find deals or whatever. So there's a lot of like the multifamily side, the large multifamily side is very conducive to kind of team based where a lot of people can be involved and add value, which is really cool. So honestly, I'm excited to do more deals with you and more deals with other people in the group. And it's not just, it's fun stuff. It's a way to do what we all want to do, which was create more cash flow, create legacy, all those things that we get to do with people that we've committed to being around, and we're there on purpose, right? We chose that family to be a part of it. We didn't, we weren't forced together, right?
Exactly.
Yeah. Awesome, my friend. Well, hey, if folks want to connect with you, whether they're looking to do deals, they're looking to learn more about some of the deals you're working on, any of those things, you have a podcast as well. Like, how do people connect with you to learn more about what you've got going on?
Yeah. Thanks. So yeah, my podcast, Multifamily Money, it's on all the normal, streaming services, Spotify, Apple Podcasts, Google Podcasts, all of them. So you can learn more about what we do and how we do it on there. And then where I'm most active is Instagram, and my handle is at ShawnOWins. That's ShawnOWins. And then our website is greenbriercg.com. Stands for Greenbrier Capital Group. So yeah, you can schedule a time to talk on there or just reach out, and I'm always on Instagram. So I love talking real estate. So yeah, feel free to reach out.
Awesome. We will add the links down below in the show notes too. If anybody missed it, just make sure if you're driving or something, you didn't get that down, make sure you check out the show notes on investorfuel.com, and we'll add links as well. So awesome, man. Well, hey, thanks for sharing some time with us today, getting to know you a little bit better and helping us understand how you find deals.
Hey, Mike, thanks for having me. It's been a real honor, and I look forward to seeing you in a couple of weeks.
Absolutely, buddy. Appreciate you. Everybody, if you haven't yet checked out Investor Fuel, whether you're a single family investor or a multifamily investor, even, just go to investorfuel.com. You can learn more, schedule a call to talk with us, and see if you might be a fit to join one of our groups. We have an amazing mastermind of people that are big givers, like Shawn said, helping each other out, whether you're in single family or multifamily. And if that resonates with you, we'd love to talk. So go to investorfuel.com to learn more. Until then, see you on the next episode. Are you an active real estate investor? If so, and you want to latch on to the power of surrounding yourself with over 100 of the nation's leading real estate investors, all committed to building stronger businesses and living richer, fuller lives, you should jump on a call with us to learn more about Investor Fuel. Simply visit investorfuel.com to get started.